Is it actually possible to replace your entire job's income with an investment portfolio? I'm not talking about some get-rich-quick nonsense, but a real, concrete plan. Well, that's exactly what we're going to build today. Think of it as a ladder to financial independence, and we're going to climb it rung by rung, starting with a solid 20-year plan and going all the way up to a really ambitious 5-year finish line.
So here's our game plan. First, we'll bust a huge myth you see online all the time. Then we'll lay the foundation with that 20-year plan. After that, we'll see how to speed things up to 15 and even 10 years. Then we'll tackle the end game, that aggressive 5-year plan. And finally, we'll wrap it all up and figure out what your path forward looks like.
All right, first things first. Before we can build a solid plan, we have to clear away all the junk. You've probably seen some truly wild promises out there, and understanding why they're basically impossible is the first step toward making a plan that actually works. We've all seen them, right? Those videos promising you can turn like $75 into a full-time income. It's a super appealing idea, especially if you feel like you're just spinning your wheels paycheck to paycheck. But the truth is, real wealth isn't built overnight. It comes down to 3 things: discipline, capital, and time.
Let's just put some hard numbers on this fantasy for a second. To actually turn $75 into a livable income in a decade, you would need to get a 102% return every single year. I mean, that's not just beating the market. That's completely defying the laws of financial gravity. There's no way. Not even the best investors on a planet could pull that off.
Okay, enough myth-busting. Let's get real. This is the first rung on our ladder, and it's a solid, totally achievable 20-year plan. Yeah, it requires some patience, but it's built on a foundation of really strong strategic growth. And our first stock pick is a perfect example of this.
So our foundational stock is Zscaler. Now, why Zscaler? Well, think about it. Cybersecurity is one of those things that companies absolutely cannot cut corners on. It's a non-negotiable part of their budget. With huge corporations getting hit by hacks that cost them millions, spending on security isn't just an option, it's totally essential.
And this is where Zscaler really shines. You see, the entire cybersecurity industry is growing, sure, but Zscaler isn't just playing in the slow lanes. No, they are a dominant player in the fastest-growing parts of the market, like cloud security and SASE. We're talking about segments that are growing at a blistering 18% a year.
So here's what the plan looks like. If you invest just $1,000 a year, that's less than $85 a month, and you target a 25% annual return with a growth powerhouse like Zscaler, you could build a portfolio worth $430,000 in 20 years. That's enough to spin off over 40 grand a year in income, basically replacing the median salary. It's a long road, for sure, but it's a real.
But hey, I get it. 20 years can feel like an eternity. The great news is, you're not just a passenger here. You're in the driver's seat. So let's see how we can stomp on the accelerator and shorten this timeline by playing with the variables we can control: capital and risk.
Now, to speed things up, we need a stock with a little more juice, like Astra Labs. These guys are solving one of the biggest bottlenecks in the entire AI revolution, the connectivity inside data centers. And here's their ace in the hole. Amazon isn't just their biggest customer, they're also a major shareholder. Their futures are literally tied together. So here's the trade-off. By bumping up your annual investment to $1,500 and targeting a slightly higher 30% return with a stock like Astera, you could shave 5 full years off your plan. That little extra capital each month can literally buy you years of freedom down the road.
Okay, ready for the 10-year power play? Now we're bringing in 2 heavy hitters. First up is Alibaba, which is in a fantastic position to ride the wave of China's huge push in the AI race. And second, we have SoundHound, a company that's already a leader in the massive voice AI market with some really unique tech.
Now, look, reaching this goal in just a decade, that's going to require a much more aggressive approach. It means upping the investment to $2,000 a year and targeting a much higher 55% annual return. It's a high bar, no doubt about it, but it just goes to show you how you can actively shrink your timeline by changing your strategy. Hey, just a quick pause here. If you're finding this step-by-step breakdown useful and getting some value from it, do me a favor and hit that like button. And be sure to subscribe to the Stock Market Mojo YouTube channel for more plans just like this. It really helps us out.
All right, this is it. The summit, the top of the ladder. This is the most aggressive plan designed for the most ambitious among us. To even aim for a 5-year timeline, we're going to need a potentially game-changing asset and an advanced strategy to really supercharge our returns. So our final investment is the iShares Ethereum Trust. Why? Because Ethereum isn't just some cryptocurrency. You have to think of it as the foundational backbone for a massive revolution that's happening in finance right now. It's called tokenization.
So what on earth is tokenization? Well, it's actually pretty simple. It's just the process of moving real-world assets like stocks, bonds, real estate onto the blockchain. And the benefits are huge. It's cheaper, it's way faster, and it's more secure. And listen, this isn't some far-off sci-fi dream. We're talking about giants like NASDAQ and JP Morgan who are already moving billions of dollars in assets onto this network with plans for trillions more.
Now, to hit our 5-year goal, we need some serious leverage, and that's where an advanced option strategy called a synthetic long comes in. I want to be crystal clear here, this is not for beginners, and it comes with very real risk. But what it does is it lets you control a huge stock position with just a tiny fraction of the capital, giving you the potential for magnified returns.
Just look at the power of this strategy. To buy 1,000 shares of the Ethereum Trust, the old-fashioned way, you'd need over $24,000. But using a synthetic long strategy, you can get the exact same upside exposure for just $640. That is just incredible capital efficiency.
And here's the potential payoff. A 40% move up in the price could translate into a 15 times return on your money. It's an unbelievably powerful tool. But, and this is a huge but, you have to be aware that just as the gains are leveraged, so are the losses. This is a high-risk, high-reward strategy, and it's absolutely not for everyone or for all of your money.
Phew, okay. We've climbed the entire ladder, all the way from a steady 20-year marathon to a breathtaking 5-year sprint. The most important thing to see here is that you have choices. So now it's time to bring it all together.
So, what does this all boil down to? First, having a real, structured plan is everything. You have to forget the hype. Second, you are in the driver's seat. You control the key variables, your timeline, and how much capital you put in. Third, you have to understand that bigger rewards always come with bigger risks, so you have to pick a path that you're actually comfortable with. And finally, financial independence, it is not a myth. It is absolutely possible with a clear plan and the discipline to stick with.
And that really just leaves one final question for you to think about. As you look at this ladder, from the slow and steady 20-year foundation all the way up to that aggressive 5-year endgame, which path are you going to choose to build your financial future? The choice is yours.
For more deep dives into these kinds of actionable, wealth-building plans, make sure you subscribe to the Stock Market Mojo YouTube channel. We're here to help you take control of your financial future. Thanks for watching.